Hi, it's Rebecca Robertson, Evolution Financial Planning, and I'm here with the lovely Poppy Fox today at Brooks Macdonald. We've been having a chat about Brexit, but also what I found really interesting chatting with Poppy today is regarding property. So property investing is something that a lot of clients of mine have wanted to get into, more the conventional way, which is buying property, bricks and mortar, and then letting the property out. But lending has been reduced and property markets have been fluctuant, but it's still a very lucrative way of investing money. And as far as most people are concerned, safer than maybe the stock market. So with your vast knowledge around property investing in the stock market, what would you say are some of your, not necessarily advice or top tips, but maybe a way of helping people explain what that might look like, which is obviously very different from the conventional way of buying property?
Yeah, I suppose just starting off, a quick explanation of how we buy property at Brooks Macdonald. So I sit on the property research team, so I spend quite a lot of time looking at different types of property investments. Just to mention, when we're looking at property, we tend to buy commercial property because we're aware that most of our clients have quite a lot of residential exposure, usually through their first home and often with a second home. But if you are looking to make an investment in property, and given rule changes and the sort of illiquidity of sort of buying a house and the costs involved and the time it takes, you could potentially look to buy part of a sort of property fund or a property share, i.e. you could go to a sort of market and buy a share in a property fund. So it would mean there would be some costs involved in getting involved, but nothing like buying a house. And also you'd have liquidity, i.e. it would normally take a few days to get out of it, but it's not going to be something you're going to be tied up in for years and years. Yep. Obviously the caveat of that is that, if property markets do fall, you might not want to sell it at any given time. You might want to hold on to it and see it as a longer term investment, but it's definitely an option if you wanted to invest in property without going down the route of buying another sort of home.
Yeah, sure. So you could, rather than having to have a house, go to a letting agent, put it on the market, wait for people to come around and view it, which on a slower market that might take longer. As long as there's not a sort of a massive drop in the marketplace, you could get in and out of that quicker. So
for example, you could go and buy a REIT, which is a real estate investment trust, which is effectively a type of investment that's listed on an exchange, so i.e. it's daily traded. So yes, you might have to, the price might move, but you'll always be able to get out of it. And actually, we've seen quite some falls in UK markets over the last 6 weeks or so. So actually, quite a few of the REITs are looking relatively good value, i.e. they're trading on a discount to what we call their net asset value.
Marvellous. Wow. Isn't she amazing? Isn't that great? So there's other ways for people to invest in property. Is that what that's what we're saying?
Yeah, there are other options and thinking I want to become a buy-to-let landlord and going down that route, which, as we've discussed today, isn't perhaps as sort of easy or lucrative as it was a few years back.
Perfect. Fabulous.